Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that's up on YouTube. Now, if you didn't get that email, go into the description of this video and you'll see a link. And then you can get on my free email list, get all my stock trading updates. A huge uh, 10 trading sessions we have seen. Uh, I've put out some commentary, or I'm going to Monday, about how really everything has changed. The stock market has basically hit a wall. Unfortunately, I think that's going to cause the economy to hit a wall too. But that said, it's not time to panic. You don't have to worry about your bank deposits. I know the bank stocks have crashed, but this is not 2008. This is the Wall Street Journal from last Monday. Five Fed take steps to stem bank bailout. And they basically backstopped all the regional banks with a 12-month emergency lending program. If they need money, the Fed is there to give them the money. All they have to do is put up some collateral and they will get an interest-free loan from the Federal Reserve. So the situation is not like what some are saying it is on social media. That said, bank stocks have fallen and banks do have some problems, and that is helping to drive up the price of gold. And these problems aren't going to go away even with these Federal Reserve programs. They're not problems going to drive all the banks to bankruptcy, but they're going to cause the Fed to stop raising interest rates, which is going to set the stage up for future inflation down the road. Not tomorrow, not next month. I actually think the rate of inflation is likely to diminish a bit. I'm going to write why. I think that you'll get the article if you subscribe to the free email list. But the thing is that on the balance sheets of banks are treasury bonds that were bought 2 years ago and before. And the rise of interest rates and inflation has caused those bonds to fall in value. Consequently, the balance sheets of banks have dropped in value. And that is why the stocks have fallen in price. And why, unfortunately, banks are likely now to be more careful on who they lend their money out to and how much money they do lend, which will be a element of the economy that is likely to cause it to slow down here for a quarter or two, maybe. We'll see. But that's not a depression. It's not end of the world. But the important thing is it sets the stage for the Fed to stop raising rates. Maybe they'll do it one more time. We'll see. And all of this is bullish for the price of gold. The price of gold was up so far in March. In fact, I did analysis of all the sectors of the stock market. Mining stocks, silver and gold stocks, that is, are the top gaining sector so far in March. Now, let me show you the charts of gold so we can understand how they're set up and what's happening and why this is really a critical pivot point for the precious metals market. Now, this is a chart of gold, and I've highlighted on this chart the volume indicator. And you can see there was a surge in volume. It's a surge in buying volume that caused the indicator on the bottom of this chart, the on-balance volume indicator, to get near the high of February. That indicator is a running total of taking the up days and taking the volume on that day and then subtracting when there's a down day, the volume. And then so the volume's been going, on-balance volume's been trending up now since the beginning of this chart, 2 years. In fact, gold, even though it did have a dip from March to October, November, gold was up despite that dip year to date last year when just about every single thing else was down. And now gold is emerging as the best performing asset class of this year too. So gold is the way to make some money. To have a portion of your portfolio allocated to gold is to be in something that's going to help you, I believe, perform better, beat the market. I have a portion of all my accounts now invested in gold and silver exchange traded funds, also in some mining stocks too. But these metal ETFs are now a bastion of safety, diversification in the market environment we're now in. But I think they can go up, and that's what I really want to show you. So here we see what gold's done, but if we zoom out, we can better understand the way this is really a sideways setup, and it looks like we're positioning to break out of it. Gold has been going sideways now for almost 3 years, since really July of 2020. Gold has been in sideways range with resistance at 2000, support around 1700 to 1650 range. And now we are, as of today, bumping up, or we closed on resistance on Friday, right below it. Yeah, we may pause. Maybe there'll be a little dip in gold after the Fed meeting. I don't know. But the momentum is to the upside. The 200-day Bollinger Bands, the pink bands in this chart, have squeezed together. And you can see in 2019, when gold broke through 1,400, it went to 2,000 in the next year and a half. Those are the type of swings and bull runs that happen when gold breaks out of these long trading ranges. And one of the things that makes this so likely to occur is this indicator, the GLD divided by SPY ratio, showing us that this ratio since 2020, since New Year's of 2020, has been going up. And it also established a trading range when gold made the peak last year till now, and it's breaking out of that trading range. This means that gold is outperforming the S&P 500. Not only that, that outperformance is likely to accelerate. This indicator, when it breaks out, that's when gold has runs that last for years. And this indicator is now in the process of doing exactly that. And the picture on silver, let's take a look at that, and we can see that there's some similarities. It's not as pronounced as gold, but I will tell you that if gold does go up as I expect it will, silver will follow. Typically, at the start of a big gold run, silver doesn't go up as much as gold. And then as things mature, silver will then start to gallop really fast. So this is an exciting time. I don't think this is just a rally in gold for a week, but something that's going to develop for the rest of the year, because it's not a new development. Gold has been outperforming the stock market now since New Year's of 2022, since that major stock market peak actually happened. And what's happened now? The stock market rally from October, November hit a wall. And what happened as soon as it hit a wall? Gold began to go up. And silver did too. Expect these things to continue to happen. All this is why now gold and silver are great things to hold in a portfolio to help balance out investments you may have in the stock market or in bonds or both. And not just a way to make money, but I believe it is that too. Although, I will say, I can't guarantee it. I don't have control over these markets or anything of that, but the charts are lined up. And that's why I had to show them to you, because they're very exciting to take a look at. So all that said, like this video so I'll know to make another one quicker than I did last time, and hit the subscribe button, hit the bell next to it if you're new to me in my YouTube videos, and that will make sure that YouTube will send you an alert as soon as the next video is up, and I will be talking with you